Okay, welcome back. Session number 2 is Unclaimed Property Compliance, Basics, Legal Requirements, and a Step-by-Step Reporting. Our instructor today is Kathleen Lobell. She's the Director of the Unclaimed Property Division for the Louisiana Department of the Treasury. She has been with the program for 39 years and became Program Director in 2012. Kathleen has been on the Executive Committee of the National Association of Unclaimed Property Administrators for many years. She most recently served 3 years as immediate past president following her term as president of the organization in 2022. Please welcome Ms. Kathleen Lobell.
Thank you. 39 years. I was 10 when I started. Yes, as Lizzie said, I'm the Director of Unclaimed Property, and I have been with the program for a very long time, seen a lot of changes in technology and just how we do things in the office. So today I'm going to talk about all things unclaimed property. I'm going to go over what it is, the purpose of the laws, is it escheat? We'll talk about the word escheat, where the money goes in Louisiana and other states, uniform acts by state, Supreme Court decisions that affect how we administer unclaimed property, legal requirements, dormancy periods, your responsibilities as a holder if you happen to be the person responsible for unclaimed property reporting for your agency, step-by-step instructions, some common errors that we see, best practices, and how to claim your own unclaimed property. So, to begin with, what is unclaimed property? The simple answer is any money or other financial asset that has been abandoned or remained unclaimed by the owner for a specified number of years. What is not unclaimed property? In Louisiana, land, real estate, and most tangible personal property is not unclaimed property. The name of the program is somewhat misleading because when people hear property, they immediately think land. And we get questions all the time for somebody trying to find the piece of land that their grandfather always talked about. This is just some common types of unclaimed property. It's not a definitive list. Unclaimed property is basically any kind of financial asset, any kind of money. But these are some of the big categories. We get a lot of money, especially in the categories of securities, big dollar amounts, oil royalties, life insurance proceeds. We get some really big accounts coming in. Basically, any kind of money you could think of. So what's the purpose of unclaimed property laws? Why do these laws exist in all states, U.S. territories, many Canadian provinces, and even some foreign countries? The theory is that the state can best preserve and protect the interests of the rightful owners. The most important aspect of unclaimed property is consumer protection. States make significant efforts to reunite the property with the rightful owners. We provide a central location for citizens to search. The obligation is removed from the company's books and records. The holder is indemnified, and the liability is transferred to the state forever. But states do have the use of the funds to the benefit of all citizens. There's no time limit on claims in most states. So the word escheat. It's not escheat, although if you Google unclaimed property and just read articles, the word escheat is very prominent. You'll find that in every article. The concept of escheat dates back to English feudal law. It's a common law doctrine that transfers property of a person who is missing, who has died without heirs, to the crown or to a state or government. And when you talk about escheat, the person, the rightful owner, has lost their right to claim it. In reality, almost all states have custodial unclaimed property laws. It's not true escheat. A few states do have time limits. There are 2 states, for a long time, there were only 2 states that had any type of time limit on a person claiming their property. Arizona has, I think, either 30 or 35 years. I should have looked it up, but I can't remember the other state that had a 30-year time limit. Most recently, there's a bill pending now in Georgia to put a 25-year time limit for a person to claim their property, which is still a lengthy period. Last summer, the state of Ohio passed a 10-year time limit. And well, it's not really a rumor. The truth is they needed to build a new football stadium, and some legislators looked at the balance in the Unclaimed Property Fund and very quickly at the end of their session passed a 10-year time limit without the input from the state treasurer or the unclaimed property people. Passed in the summer, went into effect in January, and they swept billions of dollars that they needed to build a stadium. And I don't think the outcome has finally been decided, but I believe that there was lawsuits filed when that happened. So most states, there's no time limit, and in Louisiana, certainly there's no expiration on a person's right to claim their property. In Louisiana, our money goes into the Louisiana Permanent Trust Fund. It wasn't always that way. Prior to creation of the trust fund, the money would be swept into the general fund after payment of debt service on I-49 bonds. The way the money works, the flow is throughout the fiscal year, money coming in goes into an escrow account, and out of that escrow account, we pay claims and we pay expenses of the program. And at the end of the fiscal year, what was left over would be swept into the state general fund. So that created a huge liability for the state. I think when we started planning the trust fund, the liability was up to $800 million, which was money gone. Money had been spent over the years. So the legislature passed legislation to create the trust fund. It was a constitutional amendment that had to go before the voters, which was overwhelmingly passed, and now the money is protected. After the debt service is paid at the end of the fiscal year, whatever's left over goes into the trust fund. We keep a small amount, a few million, to pay current claims until new money starts coming in, but the principal balance is protected forever. The only allowable use to take money out of the trust fund is for payment of claims. But the state does get the benefit of interest earned on the trust fund while the money sits there. So I'm not going to read all this. Y'all can see it on the screen or you have it in your handouts. This is just some examples of what other states do with the money. I know most of you are probably familiar with the Uniform Law Commission. That's a body that writes model legislation that can be adopted by states if they choose. Most states follow a version of the Uniform Unclaimed Property Act, but laws do vary from state to state. The act was first published in 1954. It's been amended 4 times since then. It's been revised. This very colorful map shows you what uniform laws have been enacted in states, and I put this in here just to demonstrate how varied unclaimed property laws are from state to state. You'll see Nebraska is still using a version of the 1954 Act. In Louisiana, we adopted the 1995 Act, and when the latest act was published in 2016, we were satisfied with our law, so we have chosen thus far not to adopt the new act. And I just really put this in here because it's so colorful and I like it. There have been several Supreme Court decisions that determine which state property goes to. The first was Texas versus New Jersey in 1965, where the court ruled that this property goes to the state of the owner's last known address, if known, and if the owner's address is not known, it goes to the holder's state of incorporation. Pennsylvania versus New York ruled on traveler's checks, money orders, and other similar written instruments. And the ruling was that that type of unclaimed property goes to the state where the transaction occurred. So, for example, traveler's checks, unclaimed traveler's checks, the money goes to the state where the traveler's check was sold. Delaware versus New York upheld the previous decisions. And most recently, in 2023, Delaware versus Pennsylvania and some other states, there were some disputed instruments that had been going to Delaware, and other states sued under the theory that the instruments were similar written instruments and should follow the transaction rule, and the Supreme Court ruled that that was correct. So these decisions determine what state gets unclaimed property. So what are the legal requirements in Louisiana? Businesses and other entities are required by law to report unclaimed property to Treasury, and that includes government agencies. Excuse me, I just have to take a drink. The Louisiana Unclaimed Property Act is found in the revised statutes, Title IX, Sections 151 to 182. Within that statute, in Section 153, there are definitions. The administrator is defined as the state treasurer. And it's interesting, the program was under the Department of Revenue until 2000. And when now Senator Kennedy was elected treasurer, he moved the program. He had the program moved under Treasury. And it was a massive move to move a whole division from one agency to another. But in the statute, all it took was a one-word change. It changed the word administrator from the Secretary of Revenue to the state treasurer. A holder is defined as an entity obligated to hold or pay to an owner of unclaimed property. So when I say holders, I'm talking about the companies or agencies that have the money that belongs to individuals. And the definition of property, within the definition of property, you will find language that includes that which is held by a government agency. Section 154 provides the time periods for abandonment. We call it the abandonment period, the dormancy period, or the holding period. It all means the same thing. How long does a company hold the money before it comes to Treasury? And for government or governmental subdivisions, it's 1 year. Section 156 provides the rules, 159 describes the report, and 160 requires the holder to pay to the administrator. So let's talk about dormancy periods. I assume that all of you are with government agencies, governmental subdivisions. Maybe not, but anyway, your holding period for unclaimed property is going to be 1 year regardless of what kind of property it is. But I did want to, give you some information about what the holding periods are for other companies. Utility deposits, wages, and court refunds come to us at 1 year. Royalties, mineral proceeds, and insurance demutualization is 2 years. Life insurance, retail transactions, stock and dividends, and gift certificates are reported after 3 years. And 5 years is the largest category. Bank accounts, bank money orders, most types of checks, and the catch-all language that says all other intangible properties reported at 5 years. So what is the holder's responsibility? I assume some of you may be reporting unclaimed property in your role. So I'm going to go through step by step the 6 steps: identify, determine the jurisdiction, know the laws of the receiving state, apply the correct holding period, perform due diligence, and report and remit properly. So step number 1, identify potential unclaimed property. Look for dated or outstanding liabilities in your records where there has been no owner-generated activity, where the owner has not claimed or otherwise indicated an interest in the item. Determine the jurisdiction. Which state? As we just covered, property goes to the state of the owner's last known address. And state laws are similar, but very different. There are different holding periods. There are different report deadlines. So if you have any property that goes to another state, you need to know that state's rules. So research the laws of the appropriate state. The National Association of Unclaimed Property Administrators, we call it NAWPA for short, has a great website with links to all states' unclaimed property departments. It's unclaim.org. And this could also be useful if you maybe lived in another state and want to get to their unclaimed property division to search for your own money. Apply the correct holding period. The dormancy period determines when property is abandoned, and that is in our statute in Title IX, Section 154. When does the dormancy period start? The dormancy starts, the clock starts ticking the date the funds became payable to the owner. That's really easy to determine if you're talking about uncashed checks, the check date. If we're talking about funds in an account, like a bank account or accounts payable or a refund that's due a customer, it's the date of the last owner-generated activity on an account. So there are some things that count as activity and some things that don't. And, you know, I know maybe this doesn't apply to government agencies, but even in your own life, what counts as activity on your bank accounts? A customer-generated deposit or withdrawal, a one-time or recurring ACH transaction that is authorized by the owner, online accessing of a deposit account through a restricted access site. So for your own personal life, if you are logging on to your bank account with a password, that counts as activity, and your bank should be tracking that and knowing that your account is not dormant. Even though you haven't had any deposits or withdrawals, if you're accessing it online, it counts as activity. Or phone contact with the customer if the customer has identified themselves and the call is documented. What doesn't count? Automatic crediting of dividends or interest does not count as activity. Unrelated purchases, unrelated payments, undocumented phone conversation, or a phone conversation with a third party. Step number 5, perform due diligence. By due diligence, we mean the last effort you make to contact the owners before turning their property over to the state. Louisiana law requires that a written notice be sent not more than 120 days nor less than 60 days of filing the report. The report is due October 31st, so the due diligence window is between July 1 and August 31. The notice has to be sent on all items valued at $50 or more if the address is not known to be inaccurate. And return mail does indicate a bad address. So when I talk to groups on private industry, there may be companies with thousands and thousands of items to report. Tracking return mail is important because that could significantly reduce their mailing charges when it's time to do due diligence. This is just a sample letter. I know you probably can't read that on the screen, but it's in your package. Number 6, prepare and submit your report. We require an electronic file, and that file has to be uploaded to our website. We don't want the paper. We don't want you to mail us paper documents with people's PII on it. We don't want a floppy disk. We don't want a zip drive. It has to be uploaded. We require the file be in the NAWPA standard file format, which is produced by any commercially available reporting software is going to produce a file that's already in the right format. The same file format is accepted by all states and jurisdictions. So that makes it a little bit easier for companies that are required to report to multiple states. If you're with a big agency, you may have in-house programmers that can create the file for you, and there is a copy of the NARPA standard file layout on our website. We also have a place on our website where you can manually enter your data, which really only works for small reports. So why do we require electronic files? The most important reason is security. No personal information is sent through the mail. It's a secure upload. And most importantly, for our own internal security, we don't touch your data. The reports come in to one area, the payments are received, our system automatically matches that up by tax ID and money amount, and the report is reconciled, and that data is locked down. Our employees can't change it. Accuracy is another reason. I've been here for 100 years. I remember when everything was manually entered. We had to have a group of people doing the data entry, another group of people go behind them and verify to make sure it was correct, and there were a lot of errors. So manual entry is not required, no opportunity for human error. And also, we require an electronic report simply for speed. The reports come in, they're reconciled automatically, load seamlessly, and items are available for claims within days. Now, there is one caveat to that within days. We do have a 10-day hold between the time a report is reconciled and actually items hit our website, and that is a fraud prevention measure because there have been cases before there was a hold in another state where fraud was committed, a totally fake report was uploaded, company didn't even exist. It listed owners on it. Those owners went online, owners, fraudsters, claimed the money and were paid, and then the check bounced from the non-existent company. So we do have that 10-day hold. We waive that and we push items through if the money's coming from another state agency and the money is transferred through interagency transfer. We know that money is good. And we do get quite a large amount of uncashed tax refunds from LDR. Usually when that hits our system, we have people waiting to claim their money, so we push those to the website right away. So what information is required? Basically, whatever information you have about the person, we would like to have it. There's a place for account number or check number. It's either or you could even provide both, whatever number you use to identify that item in your records. The date is required, the type of property, of course the amount. Is the account interest-bearing, yes or no? That's really important because our law provides that we continue to pay interest on an interest-bearing account that comes into our custody. Of course, we need name and address. Social Security number is required if you have it. And what the statute actually says is Social Security number if readily ascertainable, and we interpret that to be if you have it, you have to give it to us. That's very important for our ability to locate these people and possibly even send them automatic checks. Date of birth is out there. It's not a required field, but it would, of course, help us identify the owner in the future. This is the Treasurer's main website. There are multiple ways to get to us. Treasury.la.gov. You can click Unclaimed Property. When you click that Unclaimed Property button, you're taken to this screen, and at the top you'll see there is a link to Reporting Property. That's where you would get all the information. Our requirements are out there. If you want to claim your property, this is also a place to get to it, and that is unclaimedproperty.la.gov. If you click the Holder Reporting button, you get to this page where you have the option to either upload your report if it's already been created, or manually enter your data. And as I say, that really only works for very small reports. And you have to enter the information about your company, and when you click Next, you will get this screen. This is where we capture an e-signature, and you are swearing that the report is correct, and you are also swearing that you have answered the interest question. We take checks. If you're going to pay by check, we suggest that you print the upload confirmation and mail it in with your check, so that would just ensure that it gets matched up properly. Our somewhat outdated, but still out there, reporting forms. You could actually print out the report cover sheet and send that in with your check if you choose to do that. You can pay by wire. You can pay by interagency transfer, or you can pay online through an ACH payment. And if you choose to pay online, you would go back to the holder reporting page and click that you want to make a payment. And you would get this page where you put in your tax ID, and our system will find your report and take you to a place to pay through our ACH vendor. So I want to talk about some common errors. And there's really two categories of mistakes that are made. Some errors will cause your file to reject. Our system won't even accept it. And those are if it's not the right format. If you try to upload an Excel file, it won't even go in. Blank owner name, any record with a blank owner name will cause your file to reject. Missing date, date is a required field. So if you have any record with a missing date, it will reject. Invalid codes will cause your report to reject. And then there are other issues that it won't cause your report to reject, but these are the things that give us heartburn. Missing critical data, incomplete names, incorrect designation as a business versus an individual, incorrect owner relationships. So every owner that's reported has what they call the owner relationship. If it's a single owner, say a check payable to one person, the relationship is always going to be sole owner or payee. It becomes really critical when you're reporting something that has two owners. For example, John Smith and Mary Smith means something entirely different than John Smith or Mary Smith. The owner relationship affects how we would pay that claim out in the future. Say a bank account that has two owners with the relationship or, either person could claim it. A stock account that's John and Mary joint tenants, both parties have to be involved. So owner relationships are very important. And data in the wrong fields. So something happened some years ago in another state, it wasn't Louisiana. A holder filed a report, and on some of their properties, the person's social security number was in an address field. And that data got published on the state's website, and it was a big controversy. But it all came back to the holder had the data in the wrong field. So, we'll talk a little bit about some best practices. Develop and maintain detailed processes and written procedures for tracking and reporting unclaimed property. Institute a system with dual controls to prevent internal fraud. This is critical. There has been fraud where the holder had one person who had complete control of the reporting process, and this person changed some names to their friends and relatives. Claims were filed, claims were paid. We were one of the states involved. It wasn't really a mistake on our part because we paid exactly who the holder told us to pay. But when it came to light, the holder had to make good to the state. They had to give us a corrected report and pay the money that belonged to the real individuals, and I believe that those individuals were prosecuted. Track accounts that become dated throughout the process. You don't have to wait until the holding period has run. Maintain control with your customers. Maintain contact with your customers. Monitor changes in unclaimed property laws. Provide all the required information. I always advise companies that report to us, keep in mind that that money amount, that item belongs to a real individual who's out there somewhere, and the data you provide is going to affect how we can find that person and pay them in the future. We need the full name and last known address. Social Security number, as I said, required if you have it. Date of birth helps a great deal. Transaction dates. Use the correct codes. And review your reports thoroughly prior to submitting. Check your list for known individuals. You don't really want to be turning over money that belongs to your agency head or your current employees. Check your list for familiar names. Be sure the amount on the report and the payment match. That is what allows our system to automatically match things up and automatically reconcile that report. We need one check per report, one check or electronic payment per report. And provide contact information for the person who can best answer questions about the report. Maybe your agency head is the official signer, but if we have questions on the report, we need to know the person. We need to talk to the person who actually prepared it. What if you need an extension? The due date is October 31st. Contact us before the due date. We will happily grant an extension. We always grant extensions, with the exception of a few times a company has requested an extension year after year after year, and finally we say, no, you have to get your act together. And we grant extensions for 30, 60, or 90 days. So this is my favorite little character. We call him Cash. He's our mascot. I had a life-size cutout of him in my office when we first got this mascot, and I called him my new boyfriend. There is currently $1.4 billion available to be claimed. And we make significant efforts to locate people. We have the online search feature on our website. Many claims qualify for an automatic payment. We contact owners, or I should say attempt to contact owners for large dollar amounts. I get a report. During reporting season, I get a report daily that includes every amount $10,000 or greater, and we have an outreach team that starts looking for those people right away. We issue checks based on current addresses that we get from LDR. So once a year, we match our data with LDR, and they give us the address of the person on their most recent tax return. Up to a certain dollar amount, we send out automatic checks. We send the legislators a list of new items in their parishes every year. To be perfectly honest, there are only a handful of legislators that ever look at it. There are one or two that make it their mission to find the people in their district. We publish the names of owners of new items every year in the newspapers. Some states have gotten away from listing names in papers. It's probably not the best use of our advertising dollars, but it does generate a lot of interest. We get a lot of claims when the names hit the paper, although not necessarily for those particular items on the list. And we host live events throughout the state. We participate in a lot of conferences. These are just some pictures of our team in action. So how do you claim your money? Which is what everybody's interested in. Everybody should pick up their phone right now and go to lacashclaim.org, do a search. You might be in there. You can get to us. LA Cash Claim is our sort of commercial. It's the more flashy site, or the Treasurer's main page, treasury.la.gov, or you can go directly to unclaimedproperty.la.gov. Do your search, discover your property, claim it. It's very secure. You enter your information, and you might get an automatic check. If you don't qualify for an automatic check, we have a portal where you can securely upload your documents. We don't really deal in paper anymore. If someone does send their documents through the mail, they are scanned in right away, then boxed up for archives, and our claims team works from the images. I'm not brave enough to do a live demonstration, but if you go to lacashclaim.org, the little character flies around. So this is the search page. You enter your name. You can refine it by city or zip code. If your name is not extremely common, it's best just to enter your name. This is a search I did on Michael Brown. I put in the name Michael Brown, which I, just made this up to be a common name. The first thing that the system did was come back and say, there's too many hits, you need to refine it. So if you do have a very common name, you'll have to refine it by city. And I just wanted you to notice, I put in Michael Brown, and the system found names that had been reported Brown Michael or Michael Brown. So that allows you to find things regardless of how the holder put your name in our system. If you see items that are you select to claim them. And you have to enter your information. It is very secure. By entering your Social Security number and date of birth, our system magically in the background sends a call to a third-party data source. They authenticate that you are who you say you are, and they further confirm that you lived at the address connected to the property. And if everything passes within certain parameters, you will automatically get a check. You'll get an email that says no further action is necessary. So these are just statistics on what we've paid out. Last fiscal year, FY25, we paid out $69.3 million. That was our second largest payout year ever. We cut 164,000 checks. In the last 5 years, we've paid out $279 million, and that's over 500,000 checks issued to Louisiana citizens and former citizens. So that's all I have. I'm happy to take questions.
Hey, Kathleen, I have quite a few from online audience for you. The first one is the trust fund. Does that get interest, and is what is used to pay for the services and the stuff to get the money back to people?
We pay for current claims coming in out of an escrow account. We pay current claims out of current collections. When money goes to the trust fund, the interest earned on the trust fund goes to the state, and we pay our expenses out of current collections.
Next question is what triggers an audit for a business or a government that you think is not turning everything over to you, or do y'all not audit on that basis?
We do audit. We don't have in-house auditors, but we contract with 4 or 5 different firms. Generally, what triggers an audit is the audit firms are looking at companies and what their reporting history is, and what their reporting history is compared to other companies of similar size. And they will send us a request to say, we want to look at this company. Do you want to join the examination?
Why do some of the unclaimed property, when you go to the website, require that you call in and you can't see the information like you do with others?
We get names of owners from Lasers and 1 or 2 other retirement systems, but by law, they do not turn the money over to us, so the claims cannot go through our normal process because we don't have the money. So when you call in, we'll tell you, this is Lasers, here's the number, this is who you need to call.
Okay. For turning in the money from a business or a government, does it go by, if you've issued a check multiple times to the same vendor, like you went back, the vendor didn't cash the check, you talked to them, they said they lost it, you send it back. Does the date for the time frame go by the original check date or by the subsequent dates where you tried to reissue it?
The original date.
Okay, got a whole bunch more coming in. Anybody
Okay.
else have any?
Anybody in here have questions?
Okay. If I have a claim number and I know, if I have a claim number, but I want to know if that one is already claimed, how do I determine that, and how do I get you to remove it if I know it's been claimed?
Okay, an item stays on our system, on the website display, until it's actually paid. So if someone has filed a claim, but it hasn't made it through the process yet, that item will still be there.
And how does somebody make a claim for a deceased person? Who can do that, and how does that go?
We pay estates all the time. Some people in my staff, they say, I shouldn't say things like this. We call them the dead people claims. If it's over a certain dollar amount, we'll need estate documents telling us who the heirs are. We always need a death certificate. We'll divide it up if there are multiple heirs and pay everybody their own check. But we do need estate documents to verify the heirs.
Can a government agency send outstanding checks that are less than a year to unclaimed property? For example, in October 26, can we send all outstanding checks for 25, even those from November and December?
The law does allow us to take property early with written consent, so the agency needs to email me and, explain why they want to do it, and we'll say yes.
When you have an attorney deposit money, but it's from their client, who does the owner become, the attorney or the client?
It depends on how the attorney reports that to us. We pay whosever name is given us as the reported owner.
And if you have property that you find out, like a new clerk comes into office and finds out that the other clerk wasn't doing it, so it may be property that's needs to go to you that may be 10 years old, how do you file that with you?
Just file the report. We haven't assessed penalty and interest in a number of years, and we would never assess penalty and interest on a government agency.
And on the websites, you had lacashclaim.org. You also had the old website, unclaimedproperty.la.gov. Are they the same website?
It all ends up in the same place. If you go to the Treasurer's website and click Unclaimed Property, you go to the same search page.
I think that's about it that I have. Anybody else have any in here? Sorry, can I have you repeat for the online?
Thank you. Our agency just recently established a no-paper process when it comes to issuing out utility checks to our tenants. When those are returned from the bank, it comes back to our bank account. Is it the date that we send it out? Because we normally would try to reach out to the individual to get a valid bank account. And sometimes that doesn't happen, or they can't establish another account with the bank. How do we send that? Or when do we classify the start period for that?
It would be the original check, the original date that the property became payable to the person.
Okay, thank you.
Over here, Judy.
Is there a minimum?
There is no minimum for reporting. The law does allow you to aggregate items under $10. The concept of aggregating goes back to the days when data entry was manual. We really prefer you not, and we get amounts as low as a penny.
Hello, thank you. We're, as attorneys, we're also given other additional or different instructions regarding client funds about turning them over to the Louisiana Bar Foundation. So I was just wondering, trying to distinguish the difference.
Yeah, I know money in your client account goes to the Bar Foundation. That unclaimed property would not supersede that.
All right, I think that's it. Thank you, Kathleen. We appreciate your time.
You're welcome. I'll be around if anybody still has questions that they didn't want to ask.